Samantha, what's your take on this latest pullback here in US equities? Was that kind of due given a lot of the good news has been priced in?
I think the sentiment, right, has been all over the place, and in point, volatility has then been all over the place. I would say if you look at what valuations have done from last year to this year, basically all of the valuation contraction we saw in 2018 has been recovered in EM and in the US. So that means all of the news has been priced in.
So what takes us where next?
I think it goes back to Washington, so I think the same theme as last year, right? If trade tensions can simmer down, at least optically, I do think that means that the US market can rally and the dollar could weaken a bit and international could continue to do well.
You mean if there's a trade deal with China?
A trade deal with China, yes.
You don't think that's already priced in?
I think in the majority of it probably is, but that being said, there are other issues, so access to markets and technological dominance. Those are two big things that I don't think we've even started to really think or talk about above and beyond just trade.
Let's talk more about the global growth environment. What is it that has slowed it down a bit, and what kind of defines whether it goes further south or can rebound from here?
So if we look at top-level data, business spending and CapEx has been the main drag on growth, whereas the consumer has been the only thing that's been holding that up. So we see global hiring is still doing really well. Global spending from the consumer side is still doing really well. Businesses, on the other hand, are definitely on pause.
So what does that tell us about earnings for the rest of the year and what's already baked in terms of the weakness?
So I think earnings growth is lackluster everywhere. So we're looking at 4 to 6%, various regions around the world, but they're all within that band, which is not amazing. But to your point, I think there's a bit of a disconnect between global growth and then how markets are going to do. I actually think there's a little bit of a wedge between those two things, and global growth isn't stalling, it's just slowing down. And I don't think markets are too upset about that. We've priced it in from last year, that growth is slowing.
And so overall, you like EM and you like US
That's
equities.
Right. So we think of it as a barbell.
So talk us through the case for EM then, given that you're not that optimistic overall about global growth.
So for EM, it's this idea that China, everything comes back to China, is doing a little bit more fiscal stimulus. They're accelerating that piece. That means Chinese sensitive assets are doing better for the year, and we expect that trend to continue. So that, in a nutshell, is EM stocks. We also think that valuation suggests that EM has the most room to go from significantly undervalued to fair valued this year.
Do you think it's going to be a problem if President Trump keeps up talking about the Fed and blaming Jay Powell, as we heard this weekend at CPAC, talking about the dollar, wanting it to be not as strong as it is, or does the market just brush that off?
I think anything to do with Washington is still kindle to the fire for volatility, but I do wonder how desensitized we've become to these sorts of things. Even thinking to 2020, which feels like a million years from now, right? We know election years are tremendously difficult for markets for the most part, but I wonder if we've all become desensitized to policy news in that sense.
So you don't think it's getting, I mean, the dollar's up, so it's not like they took that to heart.
I don't think so.